Hello and welcome to the Wednesday check-in powered by the Gokhstein News Network. I am your host, Landy. We're going to take a look at Bitcoin today. We might peek at traditional markets real quick and take a look at Bitcoin dominance as well and kind of check in and follow up with where we left off from on Monday. And, Bitcoin thus far is trading between major areas of support and overhead resistance now. And I just wanted to point out very simply, where that support initially came in, and it's right around that $112,000 prior all-time high before Bitcoin broke out to, of course, the new high up here at $123,000. Now, we did see expansion into this area right here, right at the high, with, as long as Bitcoin is trading below the basis band here and the low side of the range, is more likely or more biased towards the downside area. But if we can see a recovery above the 115.7 to 800 area, that would give Bitcoin a little bit more room to move up to the low side structure on a closing basis. And that's going to be kind of between these two lows. Some are going to have 117.3. Me personally, I'm a little bit more biased towards the actual initial candle that set the highs up there at just below $118,000. Now, I'm going to turn on the areas of support and resistance that, for those that have watched my show before, are very familiar with, but I want to get through a few things here. And the first thing is I want to take a look at RSI. We did see that RSI in intraday hit, and then through the actual low at 112 was right around where the bearish control zone edge was at the time. Of course, that updates every day. It did not close there, and of course, RSI is representing the close here. And in this case, we are below the 50 read here, so we've wicked up into the midline a few times intraday sessions, but there's not too much to speak of in terms of this current downtrend and move down in terms of opportunity, unless you start looking at the low that was set here that already provided for the initial bounce coming off of the low side structures over here. So, and that's not as powerful as seeing some sort of a trend shift. But more importantly, what I think we're starting to see is, a setup form. Now, momentum for a regular stochastic momentum indicator is pointed to the upside at this particular moment. Doesn't mean that it's going to remain pointed to the upside. So we're going to set some conditions on what we need to see moving forward, including the pivot here. The pivot's going to be at 112.450. So, upside momentum in the context of this downtrend, which is a counter trend signal for momentum, is going to remain up as long as we see closes come in above that 112.450 to 500 area. Now, what is the criteria for kind of changing the trend? You'll note that we have a low here and we have a high here, and this high is we just came back and tested in the Wednesday session, right? So what we need to see is a trend break, and we do have a swing low set, so a swing lower high to a swing higher low as it relates to the last higher low over here, but we don't have any low set. Where we see a low actually set from here, there would be both a low set and a closing downtrend break, because this, even though it doesn't look like it, is a closing high. This bearish candle did come in at a close of 114.112, and the open of the prior candle, which it needed to close below to set the closing high, was at the $115,051 there. So it did actually set a closing high in addition to the bearish candle setting that swing high, and then right into a higher low with the closure of the Wednesday candle. So what we need to see to break the swing downtrend, and even in this case, a slight break of that that closing downtrend, be closes above 115.756 in this case. And this is going to be pretty familiar territory for those that have been keeping track with these videos here. That is the bottom side of this swing low right here that set the high. So the first big bearish candle that set that high on a swing and a close. and that is at 115,700. And you can see the Bitcoin has come up and tested it. Now it's starting to, it has now recovered on 2 closing candles. The actual swing low outside of that range that I have defined here at 114,750. And as I mentioned, that's good to go and test the 115,700 to 116 area. We need to start seeing closes to give the bulls the opportunity to start looking more towards the basis band now and the 116. If we start seeing Bitcoin trade towards it, we'll see it still head down a little bit, but it's about 116,600 to 700 depending on your chart. Here on Coinbase Spot, which I like to use because that's what all the institutions are using for custody is Coinbase, right? So, and a lot of settlement happening through Coinbase as a company and the totality of the products that they offer both to, mainstream retail and institutional clients. So, and, I need to see this start closing back above around 117,800 to 118. And that would give the bulls the opportunity, in my opinion, to start working their way up to the mid-range there, about 119, start trying for that, for the highs up here. The initial high that was put in, of course, we did get a higher high and a close, but right around the 119, 120 area to 121, where you can see the upper second standard deviation is coming in. Not really interested in anything that swings through. Need to see closes above here to then start to go and test right around where the upper third is, just slightly below the all-time high at 123K. And I would look to 123 to 125, and of course anywhere above 125, especially on daily closes if we haven't already tried to push up towards the next big area here at the 128 to $130,000. That's what I'd be looking for next on expansion. But Bitcoin has to change trend, right? So we have to see a trend break. It'd be an ever so slight one, would not be a signal, but closes back above 115,756 would do it, regain that 118, and things start to shift in favor of the bulls, but maybe not right away. We would still need to see some higher low structure from either a swing or a close from there on out. If it didn't just try for the top side and try to break out of that tighter range up here. But at this particular moment, Bitcoin's just trapped between right around that 115.7 area to the lows here at 112. We do start to see 112 break down. That's a wider area in the weekly, 112 to 109, with some daily areas of interest along the way around 110 to 110.5. Some are going to have different levels, and that's fine. It's going to be really chart dependent and exchange dependent. For me here on spot, it's been pretty darn accurate, right? 112 and then a slight swing below was kind of our initial target at the top side of the zone to begin with. We have the lower third standard deviation is down here at the 110.5, kind of cutting across the highs here. So that would be daily areas of interest. Bulls don't really want to see 109 lost. They see 109 here lost. That's going to start to look like, and by the way, that's the prior weekly closing all-time high. Then it's starting to put the original structure that kicked off this move into danger, and that's around the 108 level with the lows coming in at that 107,270. And if bears start taking over, then they can run for the next big area at 105 and possibly down into, the 102, 103 level. You'll see the big red zone down there, something to be aware of if that were to start happening. But for right now, there's not too much, just trapping between, prior resistance, found it as support, and then prior support, finding it as resistance, right? So just kind of trapping between that 112 to 115.7 area at the current moment. When looking at the weekly, just to kind of keep on where things are and remind ourselves where things are before we get into the Friday show, is just kind of a refresher here for where things are on the weekly as it relates to the bands. We lost the upper first standard deviation, closing slightly below and finding it as resistance. This does oscillate ever so slightly intra-weekly, right? I think I'm saying that the right way. My brain is a little fried. Did a lot of talking today. But yeah, intra-candle or while the candle is still open, as price moves, you'll see the upper first standard deviation move up and down. We did see a wick slightly above, but it's, when we start seeing price push it, it's right around 115.5 when it's like butted right up against it. And even if it starts close right on it, it's going to be right there at like that 115.700. bulls do want to see closes back in there, right? We do have a closing high, the closing higher high at that 119 area to right around 119.5 with the all-time high there. That would be the volatility zone of interest. But it would be, this is what the bulls want to see recovered. And this is going to continue to move up because the basis band is moving up. And of course, this is a good thing. Basis band is right around 103, just shy there at 102.9, but it is above the last higher low. And, we have structure here, right? We got two highs and we have one higher low here after the trend break. So, can we see another higher low put in somewhere around here? That's what the bulls are shooting for. Depending on where this week closes, wherever this week's high is going to be, and I'll touch on this on Friday, is likely going to be the, wherever it closes or whatever the high has been in this week will likely be, unless it closes above the all-time high zone up here on the close. That is going to be what the bulls need to close above to set the low and set this higher low, not just on a swing if this candle turns green. There at that 111.9 area. So there's a few things to consider here. Momentum is down, but there's no real divergence coming off the other side of this. Could get a bullish reset. I said that on Monday already. And in order for this counter trend signal shift in momentum here to actually be playable, we need to see, that 115.756 specifically closed above for it to be, an actionable signal to start looking up for a possible, range low recovery up to that 118 level. And then kind of go from there. Otherwise, it's more biased towards, retesting 112 and possibly into the zone between 112, 109 with those areas of interest along the way. Let's actually check on a few things in traditional markets because I haven't shown this in a while. I've talked about it a lot on various spaces. But, in traditional markets, we did get a gap fill on DJI. Got that nice green gap fill, kind of rejecting in and around that area. Same for NASDAQ, although it did close green and has recovered the bottom side of the closing high candle there that was bearish. Opened on a new all-time high and then sold off. We did also see a nice recovery there for the bulls on SPY. So is Dow the outlier here? Well, it has been for quite a while. We have to see traditional markets need to play back up to 635 or 635. So about, it's not far off, around 635 by the upper first to really start to change the picture that the highs could get ran again. And this be a deviation of trend for SPY. And of course, if you're using SPX, which either or really doesn't matter when you're charting, to be honest, they're going to be right around the same levels. So yeah, we have the upper first right there, a little bit higher at 63, 66, which would be the equivalent of, 60, man, my brain is not working, 63.36 for SPY. Our futures painting a different picture, a little bit in the early going here for the actual Thursday session, which of course it's Wednesday, but the Thursday sessions are open on everything for futures for traditional markets. And of course, Bitcoin and cryptocurrencies living in the future compared to me already on the Thursday session. So NASDAQ kind of doing the same thing early session here. And this is kind of, bulls want to keep pushing, and we'll see kind of what market open looks like on Thursday. And then we'll talk about this after market close on Friday. But another big vector that I look at, and this is BlackRock. They have their investment grade corporate bonds and then high yield corporate bonds, ETFs. They're a good vector for kind of evaluating risk in markets on the corporate sector side. And then of course they have vectors for kind of looking at all of the treasuries, for US treasuries in this case, for the 7 to 10 year and then the 20 year. You can get a good idea of kind of the risk environment. And one of the things that I had kind of noted is we had a break of structure on high yield, which when high yield recovered, it was risk on all the way. And what we saw was investment grade actually lagged. And then, of course, treasuries lagged, right? Treasuries lagged after the sell-off. Now, of course, they did spike pretty high initially, but then they started to lag and go back into a downtrend, right? For longer dated treasuries. And then really it was just hit the high and go sideways. Meanwhile, we had more of a risk more risk on in the investment. I'm sorry, in the high yield side, which is, higher risk. So, and now we've kind of seen a little bit of a break of structure, and with that break of structure, we actually got higher highs on investment grade bonds. So a little bit of a risk off move after the BLS data last week. And, that's kind of not really unexpected. We do have some important things coming up that are kind of, paint some more um, another or help to clear up the economic picture going forward. But the more immediate of them is going to be what we have here coming up with core inflation rate. And that's going to be for month over month and year over year. And that is going to be next Tuesday. So that is a little bit out. We did get some PMI services number. It was a little bit of a miss. It wasn't much. It remained above 50. So there is some things to break down in there along the way, but it's not really. It's boring. Most people their eyes are going to glaze over, and I don't want your eyes to glaze over. This is about price action, and at the end of the day, the chart is telling us all the information we need to know, and the conditions that need to be met are pretty clear. So, I'll leave you with this. I don't care what coin you're in. You want Bitcoin, if you're bullish, to break back above the 115,746, which is this high, or 756, sorry. Start working its way towards 118, get a recovery there, especially on a daily close, to go run 120 to 121 essentially, and then remain above that 112. Otherwise, it's testing the highs over here on the daily, somewhere around the 110 and a half, down to 109, and the bulls will be on notice then, because if the bears start swinging outside of there, they're going right for where the move originated from, right around the 108 region. So. If you're bullish on these markets and you're not necessarily in Bitcoin, definitely should be paying attention to Bitcoin. I will try on Friday to do a little bit more on, like a check-in with Ethereum, I guess Solana, Sui, and maybe we'll take a look at something else. We'll throw something else in there, one of the other major networks. Maybe we'll throw XRP in there. I don't know. We'll see what you all have to say. And what I would like you to do for me, if you enjoyed this video, is go ahead and throw a like on it and share it if you liked it. And I will come back at you here on Friday after market close. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.